I got this piece in the Journal today from Druckenmiller and Kevin Warsh on the Fed. Title is Fed Tightening, Not Now. And the quote reads something like this, we believe. If you can, here we go. The U.S. economy can sustain strong performance next year, but it can ill afford a major policy error, either from the Fed or the rest of the administration. Given recent economic and market developments, the Fed should cease for now its double-barreled blitz of higher interest rates and higher and tighter liquidity. They said the time to be more hawkish was earlier in the decade.
And to be fair, I mean, when people say that, well, where were you? Well, he was at Delivering Alpha saying it.
Yeah, he's been talking for some time
right,
about
but not
that.
now.
Also, the concern, the generational concern as well, has been one of Druckenmiller's big themes, right? About entitlement programs and everything else that is being inherited by the younger generation.
The assault on the Fed is pretty, well, look, I'm waiting for, other than some people in the media, for people to say, you know what, maybe he shouldn't make this one. I think, look, the world's divided between those who say, if he doesn't raise, then he knows something we don't know, and maybe that's why the financials seem to roll over every day. And if he does raise, then what does that mean for the remaining companies who have not been hurt by lowered multiples and by worries about earnings? So we're out there, and he's in real jam. And I think that he has to do one, and then say our work is done for now. We've raised and raised and raised and raised. We're not going to need to raise, and even the yield curve and the stock market is telling us that. I think he's very reluctant to rely on market forces. I think what he's looking at, and that's all they're looking at, is employment. Employment and wage increases.
Which Warsh argues in this piece with Druckenmiller, that is a lagging indicator. Do you agree with that?
It is. I mean, it's a very thoughtful op-ed piece, basically saying everything we've been saying pretty much every single day.
If the president chose to communicate in anything longer than 140 characters, he probably would have been a co-writer on this.
Yeah, that probably covers the first graph.
Because he's out again this morning with the same theme.
But
saying the Fed has got to not move.
Well, I mean, you got Tom Friedman this morning basically saying, listen, the China policy is right. You know, anyone who's read Peter Navarro, Death by China, you find it hard to believe that he was at the table where China was. People have to read that book, because basically the book is, they've been at war with us forever, and we've been trying to sell them a lot of Coca-Cola. I think it's a little cynical, but at the same time, let's recognize we got China, we've got the Fed, we have slowing earnings, we have so many headwinds, we've got tariffs, and against that, too many people were hired.
Too many people were hired. You got 7 million job openings going unfilled.
Right. Well, look, the consequences of full employment is that I think that Jay Powell feels we can't have full employment, that full employment is dangerous. I'm a believer that we seem to find workers every single month. But we may think there's full employment, but we got workers. But I recognize that if he plays the paradigm of the old paradigm of when we have this kind of full employment, we're going to have inflation, then you're going to see more days like today, which started out last night at the time, just at the time when it looked like the Eagles were going to lose. This market was up. And then the Eagles won, it was flat. Now there's really no cause and effect, David. You probably think there is, but there's not.
Okay. I'm glad to hear that.
Right.
That's one thing I can cross off my list.
Right, just take that off the list.
Okay.
But that's the only levity I will allow myself today, because holy cow, you want to join the gloom party? It's like the Donner Party. Man, they were eating bad at the end of that whole fiasco.
He went to the Donners. Okay,
yes.
Carl.
Well, it was in February.
You know it's bad when he goes to the Donner Party.
To serve man, it turned out to be a cookbook.